Good afternoon. I believe we are live here. Today is Wednesday, what is this, the 5th of January 2010, and the market did finish with a gain here of 0.5% today, as the news is following the trend here. We've had good employment numbers from the private firm. It's slipped my mind right now, but anyways, we had some good numbers come out of the market today that the market responded positively here, and we closed up after the market was looking like it was going to gap lower. We got those numbers, and then the buyers came back in. Here's our gap from this morning. Let me just change that trend tool. But we had the buyers come in pretty much right on the open, and the market quickly regained that volume weighted average price and stayed above it all session long. So it's really difficult to become bearish when the market trend is this strong. I see a lot of very smart people who are calling for some kind of correction up in here, and I agree. It feels like it's getting to that point where it's kind of scary in a way, where you think that that this market, the gains just seem to be coming so easily, and that it's due for a pullback, because it really hasn't pulled back in a while here. And looks like I turned my volume up instead of off, so let me just adjust that so it doesn't distract here. But the market did correct sideways through time here. It's been unable to really even crack that rising 10-day moving average. So yesterday, in fact, we pulled back down to the rising 5-day moving average. That's that orange line here, and almost perfectly nailed that prior support from late last year, the 29th. That resistance, which became support along the rising 5-day moving average. Now, yesterday, it's also interesting, that was the exact location of daily S2, which, if you're familiar with pivots, you know what that is. But they came in together at the same exact spot. That's where the market bounced yesterday, and the daily uptrend remains intact. There's just really, you can't look at this market and be bearish. You've got to be out of your mind, I think, to really look at it and say that you see something bearish here. You can talk about divergences and overbought and all that sort of thing, but really, it's you know what I'm going to say. By the way, happy birthday to Audrey. Audrey's my age today. So anyways, we've got this S&P that seems like it wants to continue up towards 131 or so, this next bigger level here. The market is in an uptrend, and you have to look at it as innocent until proven guilty. One thing that really is kind of not really of reason for concern, because we get it around December and January every year, is a lot of these little stocks are running, and we've seen what seems like a lot of speculation in this market. When they say the risk trade is on, they're not kidding, and the risk trade really seems to be getting leveraged. When you look at the rare earth plays, you look at stocks like MCP. I mean, this thing has just been an unstoppable monster. I remember back in here, this CEO said something like, "Oh, we think it's a bubble," or something like that. Then he came back here and said, "No, it's not a bubble. Everything's good," and then they just have squeezed the hell out of the shorts in this stock. And again, it's in an uptrend. These where these stocks are going to end is anyone's guess. But you look at a daily chart of RE, for instance, you can't be bearish about this daily chart. What is there bearish to look at? You look at a 10-minute time frame, and even here we see a small pattern just starting to develop of lower highs and lower lows, but that's hardly the reason to get bearish. Such a strong performer in here. The one thing that seemed of concern was, to me, in what happens, again, a lot of times when we have this excess speculation and the little garbage stocks begin to rise, and I'm not just talking about in the rare earth area, or as people like to say, space, the rare earth space. I just like to call it a group. But anyways, Zing, I was mentioning to subscribers last night, looked like a good play above 305. It gapped up. It was during the pre-market, there was opportunity to buy it. You can see it didn't really gap through that level. It traded through it if you were paying attention this morning. But it did get back below the VWAP. And really, I've been talking about XING, and I thought maybe CHGS could go today as well because the daily chart looked good. But, this 10-minute time frame isn't looking good. So the point I'm trying to make here is that we've got this, this group that is just continues to squeeze the shorts and, suck in really a lot of greed as well. But the garbage ones, and I call them garbage because they've been kind of associated with rare earth, and they kind of said, I think it was CHGS that said, hey, we're going to get involved in rare earth mining or something like that. And a lot of people look at this stock as a scam. I kind of do as well. XING too. They're the types of stocks that you can't really trust them, but when they can go real good. They're little lotto tickets, and if you buy them at the right time, they can move. Now this one never moved through the buy point today, so there's no reason to be involved. But the XING looked almost exactly like SHZ did yesterday. As SHZ, we were focused on it above $9.80 rather, and had a real 2-point move. We're seeing stocks move multiple percentage points in a day. So I think that the movements in XING and CHGS could represent maybe a slowing down of the momentum in the market here, but the evidence of a top, it's not there. I think I hear about people trying to short these things every single day. Today was the first time in quite a while that MCP closed below the volume weighted average price, but just barely. The even on a 10-minute time frame, we've still got these higher highs and higher lows. You can look at that and say, well, we had an inside day today, and maybe that means tomorrow's down. Who knows? But anyways, trying to pick a top is really a very, very difficult game, and not something that I'm going to try to do in 2011. I tell myself that every year, and I slip up. So we all have our things that we have to work on. But once in a while there'll be some stock that just bugs the hell out of you, and you feel like you have to pick the top, and you can't let go. You keep trying and trying and trying, and it's really kind of foolish. But anyways, I guess it's human nature. If we look at the Nasdaq also up 48 cents today, up at another high. We were talking about the potential for a failed breakout here if that was going to happen, but same thing we saw in the S&P 500, which is this prior resistance level almost to the penny became support yesterday, and here we are pushing higher once again. We're through these levels from 2007 that we were fixated on in the last quarter of the fourth quarter of 2010, and looking at the weekly time frame, you have to change the scaling to really get this into perspective and realize that all the components are different than they were back obviously in 2010 or so. But I mean, where does this market have the potential to go? Maybe up towards 58. It's just a very bullish looking market. And everything about it continues to show bullish activity, at least that I measure. Some people talk about volume flows and that sort of thing. To me, it's what's the price at the end of the day? Is it still in an uptrend? Are we still above a rising 5-day moving average? And we are. So it's innocent until proven guilty. We corrected through time here late last year, and stocks held up. We were going to get a lot more defensive if it broke down through 54, but it broke the range to the upside, and now we're seeing a higher high with a higher low. The one area that is not confirming yet is the Russell 2000. We had a little bit of a shakeout in the IWM yesterday, and that scared some people. But on a closing basis, it couldn't even close below the 20-day moving average, and it's still, and today it recovered nicely back up to those levels from last year. Now this one, it probably needs to settle down a little bit before it can continue to move higher. But it's very impressive how the market came back. The worst thing you could say here in the Russell, that is, the worst thing you could say, I guess, is if you took some Fibonacci and put that on there. But even if you did that, you can see that from the high of this year to the low of this year, we've retraced more than that 61.8% retracement level. So we've pushed up and made the higher high beyond the 61.8%. So, the idea of a breakdown is kind of logical, I guess. When you look at a market and say it's extended, it's up too much, it needs to correct this oscillator and whatever, but, prices continue to move higher. The semiconductors have been one of the strongest groups. They've, broken that up trend line. A trend line break doesn't mean that the market's pulling back or correcting. It means that we need to consolidate, where the market's going to correct, either sideways through time, like we're seeing here, or a deeper pullback through price, and it never broke below the lower end of that support at $32 a share. So shorting up in here with 32.20, shorting up in here to me is a fool's game. You want to wait for price confirmation, and even if it had broken 32, where would it have the potential to go on the downside? In a panic situation, maybe down to the rising 50-day moving average on a short-term basis, but the odds just still favor upside here. It doesn't mean the market can't break down through support, and we want to continue to monitor. If we see the semis break through 32.20, you got to run quick. You got to get the hell out of there, because it means that they're taking out the big guns on the downside, and it's time to move to the sidelines. But that evidence simply isn't there yet, and to try and continue to guess will just drive yourself mad. It's better to focus on where is the strength, where what are the opportunities? Are there low risk opportunities I can get involved in still, where I can make some money on the upside? So looking at some of these, I was talking about some of these little REITs. And we had seen GKK, for instance, a couple days ago start out real strong. Yesterday we saw Sunrise, SRZ, and I was fortunate enough to own that one right here yesterday. This was on our watch list, and someone called it out in the chat room when I wasn't watching it there. But and then stupidly I sold it up in here. Anyways, that's what happened. So I was looking at a lot of these little REITs, the junior real estate investment trusts, and looking at it and saying, well, this RAS has been one that's kind of been looking good as well. So I actually owned a little bit coming into today, but this one broke nicely above that $2.30 level. On Twitter, I'd sold some at $2.41. I actually sold some up in here late in the day as well, but still holding some of this as it's making a move for that May 28th high of $2.62. And who knows, maybe RAS could do an SRZ. Look at how this thing is run 3 days in a row. And you look at the weekly chart, I look at myself and say, what a fool was I for selling this thing for 15. I think I made 22 cents a share on it yesterday. But look at that weekly breakout. It looks a lot like this LNG. And LNG is one that really just, it couldn't get going yet today, but LNG, it's late last year, broke that this prior level. It pulled back nicely to the 10-week rising 10-week moving average on diminished volume, and we've seen some nice volume in it this week so far. Monday was a real nice day for this one. I was lucky enough to get involved in that one, and now you look at it like a 10-minute time frame. We see this little inverted head and shoulders pattern, and that's why I was thinking today, above this level, it looked like it was going to get going. It probably really needs to clear the 668-ish area or so. If it can get above 668, then maybe this one could really continue to first of all, test the highs from last year up at 7.25, and then you got to look at what are the next potential levels. Some of these stocks are going bananas. These are the types of stocks that could move to $10 a share. Look at how this is a beautiful, nice long base. I've been talking about this VTG as well. VTG has some big insider buying, big revenue increases, and that sort of thing. Up on big volume late last year as it broke some resistance, and it's just been consolidating here. It's dead right now, this thing, but it's at the rising 20-day moving average, so you want to pay attention to it. Realistically, it probably needs to clear about 209. Getting up through 209, this is the type of stock that I think could double from here. I mean, I don't like to get that aggressive on an upside target, and I don't like to fixate on upside targets. But this is the type of stock that could have a real nice move. Suffice to say, and the key is, I think, to observe these low risk stocks and look at it and say, well, you might look at it and go, well, it's a $2 stock. That's not a low risk or whatever. It's low risk when the momentum comes into it, because that's where the liquidity builds as well. And then to say, where will the liquidity build? Where will other participants be involved in this? I know there's a lot of people watching this stock, and if it does, then what's my worst case stop? I think worst case stop would be down near $1.98 or so. And if it gets down below, if it breaks out and then drops back down, you lose 10, 12 cents, whatever. That's trading. There's no perfect way to not lose money in the market. The trick is obviously to keep your losses when you have them to a minimum. So over the weekend, I had put together actually a video with some ideas in there, and those had included ATPG, which I've been talking about. Still acts real strong here. I don't currently own any of the stock, but for a longer term player, ATPG I think still looks good. There's a big short position. They seem to be having it wrong. I think if you're involved in that, your worst case stop probably goes below the low of the year at this point. AVL was one I've mentioned over the weekend, and obviously that's another one of these rare earth plays. Had a great day on Monday, and C-Trip was one that I threw in there as a potential short. And what I was looking for actually came to it actually happened, which was in C-Trip, CTRP. Let's take a look. What we were looking at was, so this was on Monday, we were looking for some strength up towards what was the pivot at about 41.80. It did that. Then we didn't want to sell it short on that strength, but to sell it short on weakness at 41.55, and then the stop was going to be, I believe, at 41.10 or so. So the trade didn't work. In fact, it turned around and had a huge day, and I think squeezed a lot of shorts in here because, it had been looking like it was on the edge of a cliff. Instead, it squeezed higher, and, you can look at this trade and say, well, that was a losing trade, and of course it was a losing trade. But how much did you lose? 50 cents on a $40 stock? That's acceptable. In my book, that's a 1.25% loss. It's not something that we want, but it sure as hell beats, still holding this thing 10% away from you. 8 times bigger loss if you don't have good money management skills. And that's something that I think that everybody needs to focus on for, 2011 and just continually is risk management. Some people will talk about stocks like ARNA, and people are making money in ARNA. To me, I look at this thing and I just see a complete broken piece of garbage that, doesn't mean you can't make money in it. To me, it has a propensity to disappoint investors, and it's a biotech. But here the last couple of days, I know some guys who've done very well with this stock, and they were talking about it here, said, no thanks, I'm going to pass. And that was a low-risk place to enter a risky stock, if that's the game that you're playing. So, when people ask me on Twitter or whatever, hey, what do I think about this stock or whatever, I throw a lot of my own bias in there. Obviously, it's my opinion, and I would look at ARNA and say it looks like a broken piece of garbage biotech stock. No way would I get involved. But if you're going to trade it, look at it. It's a nice pattern of higher highs and higher lows. I just talk sometimes a little bit more negatively about them than I should, because I'm trying to convince myself a lot of times not to chase them and not to do something that I know isn't right for me historically, that my discipline says don't buy stocks like this. It doesn't mean that they're not a good stock for somebody else. And as somebody pointed out in my chat today, that's what makes a market. One man likes it, one man's trash is another man's treasure. And you have to go with what makes sense for you. So, some of the other names I mentioned were the uranium names. Uranium seems to have cooled off a bit, especially, because there's DNN. So I would stay away from these for a little bit, but the URRE is looking like maybe a little bit better situation. I think if you keep this one on your radar, maybe above 361 or so. I also mentioned STEC, which I guess Chart Diva likes this one. She's been involved in it. STEC had a great day on Monday. It's followed through. We were talking about this one last night on STEC, that if it got back above this level here, so that was a nice little trade today, and it's knocking on these highs at 1950, where it looks like STEC, you look at this weekly chart, it's got a very good looking pattern. So, there's still a lot of good bullish stocks out there, and that if you buy them at the correct time, not chasing them and buying them at, after the stock has moved 10% in 3 days, to me that's where the fool buys. Thank God for the fool, because they continue to fuel the gains in stocks like RAS and that sort of thing. I'll let them go without me. I don't mind a stock going without me. It's about holding myself to the discipline that I know works right for me, and that's what everyone has to do. There's a million ideas out there and a million opinions. You've got to find a style that matches your own. To me, it's all about trend alignment. What is the market saying? The market is saying we're in an uptrend. Why? I told subscribers last night, listen, there's a lot of smart people that I respect who are, seeing troubling signs. I'm not seeing them personally. Let's stay focused on the long side, but as always, remain cautious and remain aware that there is risk, and that we have to, focus on risk management. That's really the only thing that we can control. Now, a lot of times, like I said, early in the new year, we get a lot of volatility. It still wouldn't surprise me to see this market drop back down. If it did drop down through 126, then I would become more defensive overall. But until it breaks this support, 126.20 even, until it breaks that, to me, it's not pedal to the metal. It's never pedal to the metal. I think that anyone who looks at the market as all in and that sort of thing, that you got to look at it and say, those people don't stick around in this business. They probably won't be here till the end of next year. You get an opinion about a stock, you load up, and invariably that's the one that doesn't follow through. That's been my experience. When I get deep conviction and I load the boat, then those are the ones that usually don't work. So there's nothing wrong with taking bigger size once in a while and using discretion in your position management. In fact, I did that today with I like to call it lingerie energy here, LNG. But in LNG, I had a lot of size in this thing, and I felt it wasn't appropriate to hold that size overnight. So I did buy some call options. I think I kind of got ripped off by buying the January 7 calls for 20 cents. But to me, it was a risk tool that I could still control X number of shares of the stock for basically 20 cents. And yeah, it's got to get to $7.20 for me to break even. So it's a sucker's bet, right? But if if this thing gaps up on some news tomorrow, it could easily be at 7, and those options will be 50, 60 cents. So to me, it was just insurance so I could have a position. But I will reload the boat on this thing tomorrow, when it's the right time to do so. But at the end of the day, I have to look at it and say, what's the worst case scenario? Something bad hits on this LNG, I could be not out of business, but it's definitely not the way I want to start out my day, my week, my month, my year. And it's not just the new year. It's not just because the calendar, we got a cute new calendar to hang on the wall. It's about risk management always, and making sure that we're here for the next opportunity and next opportunity, because the market continues to provide for, if you have the discipline and if you have the knowledge of market structure, it provides the opportunity to find the individual opportunities, long or short, regardless of what the market's doing. And of course, obviously, the long side is going to be favored when it's when the primary trend is higher. So let's see. Was wondering what you think about MIPS here. And MIPS, MIPS broke out to a new high today. So let's take a look at MIPS. It broke out to a new high today. You can't say anything negative about a stock at a new high, is the way I look at it. As long as we're starting to come into earnings season, so we're going to have earnings coming out. You want to be aware of when earnings are due out for all these stocks, but it's innocent till proven guilty. It's in a huge trend. You look at this weekly chart, or monthly rather. I don't know what the heck happened here, but here's another stock that it's out at a 10-year high basically. We'll call it 9-year high, and where are we to where we'd have the potential to go? Maybe, who knows? Maybe it's headed towards $20 a share. The path of least resistance is clearly higher. Every one of these moving averages is heading up, and on the shorter term time frame, we've got a pattern of higher highs and higher lows above a rising 5-day moving average. Now it has run from 14.5 to 17 just in the very short term. So I don't think you want to buy it, at these highs, of course, right? You want to buy after a pullback. So I think if it pulls back, it finds some support, then you buy it on some strength. I think that MIPS looks like it's just innocent till proven guilty. You can't say something negative, or I can't say something negative or see anything negative about a stock that's hitting basically all-time highs. Enrique wants me to take a look at the GDX. Gold mining stocks really are just not my forte for sure, but you would have liked to have seen. Here, first of all, the trend line and the 50-day moving average broke, support broke. Now we're testing this level. We've got a pattern of whether this stock on a longer term, the GDX that is, on a longer term basis, it's still got it's still in an uptrend on the weekly time frame, but that uptrend is in danger. I think that overall the gold miners are neutral at best. I wouldn't go near them personally with my money. Gold has been coming in, obviously, and gold seems as though it needs to correct either through time or continue price-wise to maybe go down and test the 130 level, or to go test. I don't know, probably not the 200-day moving average, but maybe the 150-day or 30-week moving average. Let's take a look. I'm sorry, that's not the gold. So the 20-week moving average down near 131.5 or so. But anyways, thanks for tuning in, everybody. Hope that everyone is ready to have a great 2011, and I will be back on live with you on Friday afternoon. So good trading until then. Thanks.